Good evening, everyone. I want to welcome you to our regularly scheduled monthly meeting for June 2026. And the first item on our agenda is to approve our minutes. And we actually have 6 sets of minutes, and I'm going to call on our Vice Chairman, Paul Johnson.
Thank you, Mr. Chairman. I am glad to report that May 7, May 12, May 19, May 21, May 26, and May 27 are in their usual perfect order, and I move for approval.
Second.
Have a motion and a second. Further discussion? All in favor signify by saying aye. Aye. Any opposed? Motion carries. Second thing on the agenda is public comments. I have had no comments, public comment requests made for this evening. So we're going to move to our investment report. And Michael, I'm going to ask you to pick up this one today.
If it's okay with the committee, I'll kind of do the investment report and the fund condition report together, if that's okay with the committee. I did talk to Ted Beatty, the trustee, today. Said he couldn't be here tonight. Asked me if I would do this. But I want to compound on each. You'll see on the investment report is where he bids out our, different CD and money market accounts. So at the bottom, you'll see that he's getting about 4.3%. But I want to draw your attention to the revenue report on the fund condition report. And if you look at the top there, there's a little number 2 with the parentheses by it on the right-hand side. But long story short, what I'm pointing out is last year in our local revenues category, we had about 15 million at this time last year, 15.8, and this year we've got about 11.6. That's not bad news. That is how, and the year before that, there was 14.8. That is how interest rates have started to slightly come down, and we are right where we should be. We're actually over budget, but that is why we did not budget that 15 million, let's say, of local revenue, knowing that was going to come down. We did not budget that as reoccurring revenue. So we're still right where we should be, but we get that question a lot, why we're so conservative budgeting investment income. And that is why, because we would have had to rely on that and replace it with something like property tax if we would have relied on that. The other thing on the fund condition report, the revenue report, we have collected 100% of budgeted property taxes, and we have collected a little over 97.5% of property tax collected. So we're right in line with where we should be. So that is all good news. And that's the investment report and fund condition report.
Have a motion to approve. Second, Commissioner Irving. Commissioner Pierce, who made the original motion there. Any further discussion? Hearing none, all in favor signify by saying aye. Aye. Any opposed? Motion carries. That brings us to risk management and financial reports. And Mr. Elam, I see him making his way this way.
Good evening. Good evening, Commissioners. So for the month of May, the revenue, $2,071,884. Expenditures, $2,196,192. Revenue less expenditures, a negative $124,308. The total for the calendar year is $10,848,369 in revenue. Expenditures, $11,886,340. Revenue less expenditures, a negative $1,037,971. And for the fiscal year totals, you'll see that for the revenue, $23,130,335. Expenditures, $27,727,260. Revenue less expenditures, $4,596,928. negative. For the 266 fund, for the month of May, workers' comp, $113.06. OJI, $77,375.48. And for the total for the month of May, you have $77,488.54. Year-to-date, you have workers' comp, $183,550.93. OJI, $861,991.69. Year-to-date total, $1,045,542.62. Legal costs for the month of May, you have $72,779.77. And that concludes my report, Mr. Chairman.
Any questions for Director Elam? I have a motion to approve the report.
Second.
And a second, Commissioner Sereno. Discussion. Hearing none, all in favor signify by saying aye. Aye. Any opposed? Motion carries. Okay, Ed,
Yes, sir. So the recommendation coming from the Insurance and Risk Management Committee and Purchasing, the health insurance proposals were opened on March the 17th and taken under advisement by the Purchasing Committee. On May the 28th, the Benefits and Insurance Committee was presented with an analysis of the received medical, dental, vision, and pharmacy administrative services. And the recommendation was to approve Cigna's medical, dental, vision, and pharmacy ASO proposal to be effective January 1. Later on May the 28th, the same day, the same information was presented to Purchasing Committee, but the recommendation from the Benefits and Insurance Committee was included. After discussion, a motion was made, seconded, and passed unanimously by the Purchasing Committee to accept Cigna's medical, dental, vision, and pharmacy ASO proposal to be effective January 1, 2027. Mr. Chairman.
you've heard the recommendation which came out of the Benefits and Insurance Committee and also Purchasing. And at this time, I'll open the floor for any questions or discussions, and then we'll look at whether we want to go ahead and make a motion on this. Commissioner Irving.
Yes, could you point me to where, to this, in the materials where the cost of the state insurance plan is compared to the cost of the county's self-insurance plan?
So at this time, there's not a complete comparison. There's some work that has been done, but there's not a complete comparison because the state hasn't come out with their changes in their plan design.
Okay. So when do we have to make a decision by?
Well, on this, it would be preferred to make it today.
No, I mean, we don't have to make a decision today. We can put this off a month or two, right?
Well, part of this is one domino affects the other domino. Sure. So and also there's, let me see if I can find it.
Do you have do you have the cost of the state?
I don't think anyone has the cost of the state for 2027 because
do you
their
have
plan.
The cost of this ASO plan, the Cigna?
The ASO part is your fees that
Right.
we're going to be charged. Then before I can do the plan design changes and knowing how much, I have to have this, like I said, the dominoes. So I have to have this approved first, then I will know how much I will need as far as making up a difference for the plan design, based on plan design changes.
But then it will be too late to adopt the state, correct?
So what?
Will it be too late to change to the state plan at that point?
I won't say that it would be too late, but there's a lot of analysis. If you're going to do the state and the county, it's extremely complex. It's not like you just look at rates and you look at
So when will you have that information? When will you have the comparison?
Well, the state last year, the state didn't put out their plan design changes. I think the letter I saw was like June the 18th.
We can wait till June the
so
18th.
That was last year. But for us to be prepared and to be able to move forward, certain dominoes have to fall. This agreement, and it's only for 30 days. I'm sorry, it's only for 90 days. So
For 90 days, so that puts us past June
Not-
30th, June 18th, so we could go ahead and defer it until a reasonable period of time, make an assessment of the state versus the ASO plan, correct?
the proposal was good for 90 days and was submitted in March. So we run into the deadline of asking for them to extend that proposal, but you also have to understand that the bids are now out there, what each person put out there. So if you ask for an extension, and then they look at, okay, here's what Blue Cross's bid is, here's what Cigna's bid is, there's no guarantee. I think it was set up to where it was the day of commission is the 90 days.
So you've set this thing up where we have to do it today, that's the ASO, and we really have no other choices, and we haven't done the analysis on the state plan so to know whether there's a savings or not or anything along those lines. Is that a fair statement?
It is a fair statement. I have not, to answer your question. It also would be a fair statement. I cannot until the state comes out with their plan design changes.
But the state will come out
And
in the next month, from what I'm hearing. Is that accurate?
yes,
Okay,
But-
so
but I have to be,
Mr. Irvin, I'd like to interject something, having been on purchasing, just to bring something up. And we also have a representative from Gallagher here. If you don't mind, if you would invite her up, and I'm going to take this as part of it. What we're worried about, and I, same as you, is what the cost is and the difference in there. And I think the representative from Gallagher may shed some light on this. As far as our budget goes, I think you're correct. We could probably get by with putting this off. Michael, what, you've put an extra 20%, or what's the amount we put over?
There is an extra 20% for the employer cost in next year's budget.
But I think that there's been quite a bit of analysis done as far as the cost differences, and that's why I invited her up here to see if she can shed some light for us and maybe answer some of the questions you have.
that would be great.
Yeah. Happy to do what I can.
I'm sorry.
Yeah,
Let me
go ahead.
introduce you
Yeah, of
first.
course.
This is Marissa Smith from Gallagher, who is our broker.
Thank you for having me. To answer your question about cost comparison, the pieces that we have at the moment would be information that they shared through their consultant, Aon, that spoke at previous insurance committee meetings from the state.
Is that the state? Aon is the state?
Correct,
Got
yeah.
it.
Yeah, and our actuary financial team did some math around that using information that Aon had published, and the cost of per member of your plan versus what the state is spending per member. So that's a guidepost we do have, including some trend and where you're at. We think that their plan is roughly $12,000 or so, give or take, per employee, per member per month. I apologize, per member per year. And the plan that you currently have is around $10,500 or so per member per year. So, using trends to look at that, plus some of the plan design changes we're contemplating, plus the plan design changes they're contemplating, we're still trying to sort that out.
Okay, so you're saying the state's about 12,000 a member per year versus what we're doing is about 10?
I think theirs is around 12,100 or so, and ours is around 10,495.
Okay, so what does that number mean? Is that the total cost to the employee, to the employee
No,
in
sir.
the county?
No, sir.
Okay.
So I think it might be helpful for this committee to think about the difference in a fully insured plan's certainty and a self-funded plan. Self-funded, we are using budget and projection, and then as the claims come in, we're incurring those claims and paying them, and we can estimate what a plan is going to cost in the future, but until those dates occur and those claims come in, we're not certain of anything, right? We're all of it is a very educated guess with a lot of math and a lot of actuary support behind it. The state plan is also a self-funded plan, but they set the rates for you all once a year, but it is also self-funded. So they're paying claims as they come in, we're paying claims as they come in, same thing is happening. When we do that, then we look at the cost. One of the measurements of a cost on a self-funded plan is the per member cost. And what I'm saying is the calculation we have currently is it has you all as being a less expensive cost per member per year than what the state plan is costing right now. That is a measurement method of determining the cost.
Okay, so to the county, though, if we go with the state plan, hypothetically, there's no risk. If we stay with the self-insured county plan, we bear all the risk.
I don't agree with that, sir.
Okay,
And
how do you disagree?
I disagree because that is a one-year snapshot.
Okay,
So-
well, that's kind of what you're looking at right now, right?
I'm sorry?
You're looking at that right now when you say 12
No,
versus...
sir. So when you move off of a self-funded plan into the state's self-funded plan, a few things happen. One of the things that happens is you lose the determination of your plan designs that fit the county employees in your location. You also lose the determination of what network has the discount program that would best serve the population in your location. But another thing that happens is you lose visibility into your claims. There is a limited amount of claims information that is available through the state. If you leave your private plan and we move into the state plan, you don't have the same visibility into those claims. And without that visibility, then pricing something else as compared to the state plan becomes much more difficult. In addition, it is a minimum of a 2-year commitment when you move to the state. But the only renewal that you'll know about is the renewal for that following plan year. So it is also risky in that way. It is not a certainty in that way.
Okay, so we lose visibility, and you just said we don't have visibility into it, but now you're saying, now you're saying we don't know what the state is. But then you're saying no, we do know what the state is. So I'm trying to piece together.
Let me clarify that if I can.
Sure, go ahead.
I don't want to leave any confusion. The part we don't know is the specific plan designs that they're ultimately going to do. They have revealed some information, but like on a new plan design that they've proposed, we don't have the plan design changes that are relevant, meaning the out-of-pockets and things like that are relevant for certain tiers of employees. We have visibility into the employee version, but not the other tiers like family and spouse. When you start to compare your plan to those offerings, it really matters what happens to the employees. And so another consideration besides the amount of premium is what the premium buys. And at the point of service, if the employee has to pull out of their pocket additional money to add to what that premium bought, then the county might not be paying it, but the employees have. So that's another part of that analysis that we have to do on this plan design element. Now, the state has published some rate information, but they have not published the plan design in completeness.
Right, and you just made the case for how we don't know the answer to the additional cost per employee for either one or for the county. Now, you said that the state is a self-insured plan.
It is, yeah.
Okay. From the county's perspective, though, we don't have to kick in any dollars. We don't have to buy excess insurance, do we, under the state plan? We would just participate, is that right?
That is traditionally how it has worked, where the state is setting those rates, on an annualized basis, and then doing all of the work behind the scenes, and then getting it ready for the next renewal. That's true. Yeah.
Okay, so,
Marissa, let me ask a quick question, and come right back to you. This, what we're looking at here, is this only for current employees, but is this also for current employees and the retirees?
No, this is your active plan population. There are retiree implications, though, that have to be considered. They're separate.
Okay, excuse me, well, I just wanted to make sure.
yeah, no worries. I was just trying to get a sense. So, to the risk to the county, though, there is no real risk, even though it's a self-insured plan. We would pay, the employee would pay the premium. What's the cost to the county under the state plan? Is there one?
There is a cost to the county. It would be the amount of premium and less any contribution that you collect from the employee. That would be the cost to the county per
Okay, but that's
employee.
just the employee paying that's just the employee paying the premium, and there being a subsidy, basically, by the county. I'm trying to say, is there any risk? Is there, like under our plan, under the county's current plan, there is a risk. I mean, we have to go out and get excess insurance, correct? And is that priced into your 12,000 per year number?
It is priced into that number.
So how much is that?
Excess premium, what that is called a stop-loss policy. We procure that annually. We determine through an analysis what attachment point that stop-loss will attach at, which is basically if a claimant is considered a high-cost claimant and they reach that threshold where stop-loss attaches, then that is the point in time when the risk removes from the county and moves to the carrier on that element. So it's basically like having an insurance policy that's a very high level, and that you're covering up to that cap in actual claims.
So when, wait.
Sorry, you're asking me so many questions. I'm trying to answer them each, but I'm not getting them all because you're
Go ahead.
giving me another one. I apologize. If I don't answer another commissioner's question, please do raise it so that I can. I apologize.
Go ahead.
Yeah.
Okay, so we've heard Ed talk about how the costs and the number of claims and everything else are increasing, okay, in these meetings. And what seems to be occurring, if that, is there an excess loss at which point we would be on the hook after that insurance? In other words, I'm trying to get kind of the county's ultimate loss percentage. We don't have the cost numbers. We don't have the cost for the state, and we are not able to do it for the county. Okay, sounds like we really. And that would be the first level of comparison. The second level of comparison, in my view, would be kind of a risk-based analysis, where you try to figure out, okay, which is the riskiest. Well, obviously, the self-insured in virtually every case is going to be riskier. Okay, and is there anything you want to respond to on that?
I do. I think there's
Okay.
a very important third. I don't really. I would not say each of those two things that you've covered exactly the same way, but not splitting hairs. There's a third element that I think is of critical importance, and that's what happens to your employee population at the point of service that we mentioned a minute ago.
I'm sorry, I couldn't hear. Sorry.
Am I not in the microphone? I apologize.
It's right in front of you.
Are you able to
circle.
hear me? Okay. I think that it's critical, and all of my clients being mindful that many of your employees work for the valuable insurance that you provide them. They care about that. That's a key component of their compensation. It's often your number 2 spend, second to payroll. So it's an important element. And when we take cost and we move it from what the plan covers to the employee's out-of-pocket costs when they go to the doctor or they have a medical event or they fill a prescription, then that is a significant component of this analysis that I've not seen other county governments forego in favor of only a savings analysis or only a risk analysis. I think there's a third leg to the stool is what I'm saying. Yeah. The third leg in this case, I'm trying to face forward so my microphone picks up. The third leg of the stool also includes, what happens to the pharmacy, what happens when they go, if they've got a specialty med, the state plan has a separate out-of-pocket max for that. You have a co-insurance up to that separate out-of-pocket max. That means that someone who is arguably one of the sicker among you incurs more cost on their back until they hit that out-of-pocket max. So that's the reason that I'm adding to what you're saying. I think that there's an important third leg that I've not seen other county governments be willing to just overlook.
So we don't have at this point the cost for that plan design or the state plan design.
We have certain parts of that information, yes, we do.
Okay, so we don't have complete information there. Okay. Is that fair?
That is correct.
Okay. All right. The last thing that's also important to me, and I'm kind of baffled by this, I don't understand. You were talking about how important it is for plan design and everything else. I get that. Okay? And the networks, I presume, are an important thing as well. What I don't understand is, even if, assuming it's relatively close, okay, in terms of premium cost, in terms of cost to the county, cost of the state, all that kind of stuff, I mean, why wouldn't you give folks, why wouldn't you make a change and give employees a choice? Because I understand to what in fact, you were just emphasizing this point. Everybody kind of look, which plan design would you want to take advantage of, things along those lines. Why wouldn't you want to say, hey, you can do Blue Cross or Cigna, or try to figure out something, that works for them, not just for the health insurance, but for the other pieces of it as well. I mean, why would you limit yourself to a Cigna ASO, basically, when you could give your employees, which would seem to be a competitive advantage, a choice between Blue Cross Blue Shield, different levels, all that kind of thing. I mean, why, and it's a legitimate question, I'm trying to figure out why you wouldn't give them a choice.
Yeah. Well, so I have a couple of thoughts in response to that, but one of them is, I think it's a common response and a common piece of feedback that having choice of network is certainly good, right? I mean, I'm not disagreeing with that. We looked very carefully, though, in your instance, at the network through the lens of where your employees have had actual claims in the last measurement period that we were using. So that was the most relevant time frame to where folks were going to get their service. We performed several network analyses on that basis. One of them was an access analysis, meaning what is the employee's access to care under the different networks that were bid. One of those was Cigna's, of course, then Blue Cross, as well as Meritain, which is another popular third-party administrator that has a network through Aetna. We compared those networks on that element of access, and Cigna is the clear winner in that category. So I don't know that we're in a position of really removing something of value on the access point by saying we're going to pick Cigna and not have a dual network option. The second measurement that we did, in addition to that access component, was a discount analysis. When you have people using this insurance, then where they go drives cost, right? There was a savings differential that's meaningful through the Cigna network based on your actual participation. And that, combined with several other factors that we did quantify, was between the Blue Cross cost and the Cigna cost was a penny on the tax rate. So what I mean by that, and the reason I would go into that level of detail, is to say that over the course of time, your population, based on current contracts, would be anticipated to experience more stability and savings overall over the course of time, for the period of time that these network contracts are in place and that the access is in place through that Cigna option. So it's not that Blue Cross is bad. We thoroughly investigated that and looked really carefully at it. They are a wonderful carrier. I have a lot of business with Blue Cross as well, and with Meritain. We have business, but at the end of the day, your population is very well served by that Cigna network. The state, by contrast, is servicing populations in different geographies. Many of them are rural geographies, and they need different network options because of those. I mean, the state is vast, right? It's a big footprint. In the local government plan, there aren't quite, or usually I haven't figured it lately, but last time we did do the calculation, it was roughly 50% of governments participate in the state health plan, and about 50% have their own plan. But that wide footprint is not the same thing as analyzing what's good and what would satisfy the needs at the most cost-effective application in your footprint. So that's the analysis that we did as part of this.
I'd like to interject a couple of things, and part of it is answering. I hope we'll be answering your question. And first, I'm going to address to Michael. If we decided to at any time change to the state plan, we have to give them a 6-month notice. Is that correct, Michael?
No, that's on the pension.
Okay. I wanted to get that clarified.
What's the time period?
Is there a time frame? Yeah.
Marissa, you know the time period change to the state, is it 60 or 90 days? Something
I'm
like
sorry, what did you say?
If we were going to change to the state, what's the time? Is it 60 or 90 days? It was.
Well, you need to give them notice in advance of their October 1 enrollment. I think typically they want to know that 60 days out.
That's kind of what I was thinking.
The proposal from Cigna that we currently have on the medical ASO had a 90-day expiration, but I do want to add that that's not something we solicited in that way, that when it came back, that was the condition on their proposal. So any thought that we contrived it that way, I didn't. It's how they filed the proposal, and we saw that, and I felt we needed to talk about it if this came up. So.
The second thing I had, Sonia, you have a comment you'd like to make on this as far as it? All right, I just wanted to make sure. Please continue, Commissioner Urban.
Thank you, Mr. Chairman. I'll make a motion to move this thing out, to defer this for a month, to allow them to come back with data, and hopefully it'll be a little more farther along. I think they've indicated it will be close, and maybe they'll have some of the data, and basically come up with kind of the cost of the state plan, the cost, of a comparable, basically, county self-insured plan, a better understanding. Hopefully we'll know the amount of the the excess insurance cost at that point. I think we need a clearer analysis between the two, because candidly, so far I've heard there may be a difference, but we don't really know, and we really don't know what plan design looks like, and we really don't know what the cost looks like, and we really don't know what a whole lot of things look like, other than, let's adopt the Cigna ASO right now. To me that seems it seems like we're making a premature decision.
Let's hold on a second. You've made a motion. Before we have further discussion, I want to see if we have a second. But I do want to point out that we do not have a scheduled meeting in the month of July. So if you're talking about a budget meeting, we'd have to call a special call meeting. Anyway, do I hear a second on this motion to defer for a month? Hearing none, motion fails for lack of a second. Further discussion? Okay, we have.
Chairman, I'm sorry. I'm just trying to get my.
You're recognized. Go ahead.
And based on where we're at, what does this thing say to us? Because we went into our budget with a 20% increase, and then we did these bids. So what is this plan saving us anything?
Yes, let's see the exhibit. I think it's maybe your first exhibit. Is it the second page? you'll see this year compared to what we had this calendar year compared to next calendar year, 2027, you'll see a projected of $1.9 million savings in the bid. That's what Cigna has proposed. And that's where I'm talking about the 90 days. You know, if we put it off, we'll have to go back and ask them. But then it was set up in order to where it would coincide, knowing that the dates were there, coincide with approval from purchasing.
Our next highest bidder is, the next highest bidder.
Yeah, well, you're
Just
talking,
FYI.
yeah, well, yeah, if you go with the second highest bidder, which is Blue Cross Blue Shield, if you look in that box, you see that it's approximately a penny on the tax rate. And it's very similar services, when you're talking about contracts, these providers have different contract amounts. So you can go in and have a knee replaced for under one carrier for less than you do under another carrier. So when you look at that consideration is what are also their contracted prices. And over time, if you move to a carrier that their contracted prices are higher, then your overall spend to your overall plan is going to be higher.
If I may add, the penny on the tax rate also, though, includes mandatory fee differences and things like that between the Blue Cross offer and the Cigna offer. In addition, Cigna bested Blue Cross by an 8-month rate holiday that's on the table at the moment under this 90-day proposal, which would give you 10 months of not paying the ASO fees in next calendar year.
Further discussion from the committee.
Is this a multi-year plan?
The plan is a 1 year at a time picture, if you
So we can
will,
cancel it
but it is a 5-year contract, but with termination language that does allow for this county to make a choice in a future year that if you were going to the state, you could make that move, like say in 28, 29. So that part was preserved in the bid process. We understood that nobody has a crystal ball forever. Those were things we needed to consider. The other thing I think is helpful for you to know is that if we were to make such a move while the contract is in effect, we would want to make sure we procured or considered procuring a product called TLO, which is it's going to cover liabilities that are excessive. So it's that stop loss concept in the period of time after you've returned to the state where claims are still coming in from the previous year, and we would be incurring those as run out. So like when the schools went to the state health plan, there was run out, this county absorbed that, but you don't have anybody to absorb yours, so we would need to think through how that's going to be done. So there'd be at least 12 months of run out, 18 months of COBRA, there would be TLO cost. TLO typically, you need to tell them well in advance that you need those quotes and then get them in. So I just wanted to point that out from a timing perspective.
So we could get out after a year. It would just be a little extra cost.
Little would be in the eye of the beholder, but yes, there would be some costs that would need to be measured and some thought that would need to be into it, but yes, you can.
So when the schools changed to the state plan, was there a savings?
I was not involved in the school's measurement of the savings. I knew that it was going on, but I don't have personal knowledge to calculate what that was, so I apologize.
Well, and part of it, you have to understand, before the schools moved, it was a blended rate. So firefighters, teachers, maintenance people at the schools, maintenance people for Rutherford County paid the same rate. When the schools left, because of your local education associations, their rates are different than local government. Usually, as far as I've been here, as long as I've been here, your government rate is always higher. Due to the demographics, population, whatever, it's higher. And so the schools automatically, when they left, got the lower rate but the county employees got the higher rate because it's no longer a blended rate.
That's true on the state plan as well. I think it's
Yeah.
important to point that
Yeah.
out. They run those as totally separate risk pools with totally separate rates. So to say that in layman's terms, the same $100 that you put toward premium on the government population won't go as far as it would on a school employee simply because their total premium is a different premium and it's lower. As long as I've been doing this, it's always been lower.
Ms. Stevenson, you're recognized. Turn your mic on.
You may have said this, and if you did, I'm sorry that I'm asking. But it would impact our dental and vision as well, wouldn't it, if we made a change? Because currently, they're all wrapped in together. Would that be a true statement? So if we went to somebody else, we would then have to, I mean, I don't know if Cigna would want to keep doing our dental and vision. You know what I'm
Yeah,
saying? You understand
yeah.
what I'm saying? So that
I do.
That's something that might need to be considered because that helps in the package deal as well, correct?
Does it help in the procurement whenever they know there is a current dental and vision program that goes alongside the medical? Yes. However, in fairness, I also want to say that we made very clear in that process that we were considering alternative dental and vision carriers. So I don't feel like I could agree necessarily that your premiums or your cost, if you will, of the dental and vision would go up. I don't actually think that's necessarily true. Just to be fair, yeah.
And maybe I didn't say it right. If we left Cigna, because currently it's with Cigna.
Correct.
So if we were to leave Cigna, then we would have to find providers for dental and vision, right?
I don't think you would, because Cigna, I mean, I have other groups that have Cigna dental and vision that are not, with Cigna for medical. So
Okay, that's what I wanted.
and because when we procured this, we tried to leave those options available. And so I believe that option is available to still maintain private dental and vision. In fact, I'd say the vast majority of clients, maintain dental and vision on a private option, even if they do entertain a state move for medical.
Marissa,
Yes.
that came up at purchasing, and, I think there was one dissenting vote, and that was because they were looking at a different vision or a different dental. And you had, I think, and I've slept since then, but remind me.
Yes.
Did you not say that we could add that option?
You can.
At no cost to us? Is that correct?
That is correct. So at no cost to you, let me clarify what I mean when I say that's correct. There is a cost to the county whenever we implement a second carrier on anything, because there's administrative load to that. I mean, Ed and his team have to add another plan. They have to communicate another plan. That has to be built in a bin admin system. But just setting that's pretty small in context of what you have. What I would say, though, is that if there is a dental and vision carrier or network that needs to be added in order for employees to be in a position where they're comfortable, currently you're with Cigna on the dental, which is an IMED footprint on the vision. If we were to add a VSP option on the vision, for example, we certainly could explore that. This current procurement had some of that in it. But the reason that I believe Commissioner P, you're saying that it would be at no cost is because you all currently don't contribute to the cost of dental and vision premiums for your employees. And so if we were to add something else, it might cost more, but the employee would be in a position to determine whether they wanted it or not. So that's—
But the cost would be to the employee, not to the county, or both?
That's correct. Just the administrative cost that Ed and his team might incur from a new plan being added, not replacing. There might be some, I would call it minuscule given the total footprint of your plan.
But again, that would be just to the employee, not to us as, well.
That's generally true. I mean, we could take that administrative cost and put it into the cost of the premium to the employee. So yes, we could make it cost neutral, yes.
Okay.
Good.
Further discussion? Chairman Phillips.
Mr. Chairman, it would be my recommendation to approve the recommendation from risk management and from purchasing for Cigna to be the medical, dental, vision, pharmacy carrier for Rutherford County. That's kind of the recommendation that came out of those two committees after hearing months and weeks of this bid process. So I would recommend that this committee make that same.
Thank you, Chairman Phillips. Of course, he doesn't, he can't make a motion here. Chairman Harris, you're recognized.
Chairman Phillips can recommend, but I will make the motion to proceed with the decision.
I have a motion to accept the recommendation from Purchasing and the Benefits and Insurance Committee. Do I hear a second? A second. Further discussion? Call roll, please.
Commissioner Gooch,
Yes.
Commissioner Harris,
Yes.
Commissioner Irvin,
No.
Commissioner Johnson,
No.
Commissioner Piercy,
Yes.
Commissioner Sereno,
Yes.
Chairman P.
Yes. Okay, motion carries. Thank you, guys.
Good evening.
Our next agenda item is number 6, IDB Bond Resolution, and Summer couldn't be here tonight, so Michael's going to cover that for him.
Yes, on your iPads tonight, you'll see this is from the IDB Board. I've also shared this with the county attorney who's here tonight. We've both spoken or seen Sumner's emails back and forth on this. But this is at no cost to the county, but it's an IDB Board resolution. Specifically, this is for Goodwill to build a new store out on Veterans Parkway, but they're trying to borrow money, specifically $6 million for the purchase of land out there. But again, it's at no cost to the county. We're just the conduit to allow them to get a better interest rate.
Any questions on this proposal from the IDB Board?
Quick question.
You recognize?
Could Mr. Sumner be here at the county commission meeting so he could answer questions about it?
I can definitely request that. I think he had a prior engagement tonight.
No, I mean at the county commission meeting.
Yeah, we'll definitely see if we can get him here.
Thank you.
You recognize?
Michael, so you're saying there's no risk to the county?
Yes.
Why are
That is-
they going through us and not going through a private bank?
That would be, I believe they think they can get a better rate. They're not necessarily going through us. We're approving, I mean, they're doing it on their own. We're not actually issuing the bond or the resolution. They're actually going through a private bank on this one. I believe it's Pinnacle. Let me pull that up. Why they chose Pinnacle, I don't know, but I want to be sure I'm telling you right. There may be, there is somebody here. Sumner did tell me, I'm looking at his email now. Somebody's here.
Welcome. Please introduce yourself.
Good evening. My name is Bria Smith-Edwards. I'm an attorney from Bass, Berry & Sims. My firm is serving as bond counsel on the transaction, and so I'm happy to explain a little bit more about the way that the financing will work. I think that'll shed a little bit of light. And so essentially, under federal tax law, Goodwill is able to Goodwill, as a 501c3, is able to issue tax-exempt bonds. However, it can't issue those bonds itself. It has to go through a conduit issuer. So in this case, the conduit issuer would be the Industrial Development Board. So the Industrial Development Board will issue the bonds, and then they will loan the proceeds to Goodwill. Goodwill will then they will execute a promissory note, which then at that point, they would execute to the Industrial Development Board, and then the Industrial Development Board would assign that note over to Pinnacle Bank. And so essentially what will happen at that point is that the transaction will essentially function as a normal bank loan between the borrower, Goodwill, and the lender, Pinnacle Bank. We just have to go through a little bit of extra steps in order to get the tax-exempt financing.
Questions?
Can I ask a question? Are you familiar with the financial structure and how how the funds flow, because we see the agreement, the resolution here and all that kind of stuff, but at some point, I'd really like to see, this is how much money gets issued, this is how much money goes along the way, and how much goodwill actually ends up with, owing and things along those lines.
So
Do you have that, or is somewhere?
it'll be a $6 million loan, and essentially Pinnacle will make that available, and Goodwill will draw down the proceeds as they need it for construction. Anything that they don't use during the construction process would then go to prepaid.
None of that affects our books, so none of this flows through the county,
No.
just to clarify.
Fair enough. What I'm trying to see is $6 million, is that the actual amount of the loan? And then, or is it a loan for an additional amount? What happens to, are there any fees that are basically subtracted or added along the way?
Well, just the principal amount is $6 million. So this approves not to exceed 6, so it could be less. There are some issuing fees and stuff like that would come, like an underwriter's discount or something. We have those. I don't know what Pinnacle would charge. I'm sure there's a closing cost to this.
Pinnacle will charge some fee, our firm will charge some fee.
But the principal amount is not to exceed $6 million. And because they're going with a private issuer, it won't have like a premium or discount like ours would when we go to bond market, because they're not going to the market for this.
Okay, fair enough. I'm just trying to get a funds flow.
You'd have to get the IDB to come and give you a report, because it won't flow through any of us. So, I mean, it would be something the IDB would have to come give you, or to give us.
Okay, is that Mr. Sumner?
Yeah, so he's the counsel for the IDB.
Could you ask Mr. Sumner to provide one?
We can certainly do that, him or someone else that's on the board.
That'd be great.
All right.
He doesn't have to show up. He could just provide it. It'd be nice if he'd show up, kind of explain how one of these works for the folks at home and otherwise. But
Well, I'm kind of like you. I wouldn't mind getting a monthly report from them myself, so they could send it to us, email or whatever.
yeah,
But-
just funds flow mainly. See, I kind of like to see how it all goes through here.
All right.
I'm with Pinnacle Bank, I'm Tammy Johnston.
Oh, wait, just a second. And who are you again?
I'm with Pinnacle Bank, Tammy Johnston.
She's with the bank, the
With
lender.
the bank. Would you like to hear from them? I'm looking at the committee as a whole. If so, we'll suspend, I'll ask for a motion to suspend the rules. Okay, I have a motion to suspend the rules. All in favor? And a second? And a second. All in favor signify by saying aye. Aye. Okay, please come up. No one at home can hear you when you're speaking back there. So if you'll face that green circle there, that's your microphone.
Hi, I'm Tammy Johnston with Pinnacle Bank. We're the lender to Goodwill for the construction of the new store. They've already purchased the land. The way the funds will flow is they will submit draw requests to the bank for construction. We'll monitor the construction of the project. We'll pay them monthly, disperse the funds. They'll repay us monthly interest, and once the project's up and completed, principal amortization will begin. We are not charging a fee. I think the only fees are legal fees for the preparation of the documents and maybe any fees that the IDB assesses to them for the process. But that is basically it in a nutshell. And as others have shared, this does not flow through the IDB or the county. There's no obligation on your part to repay the debt. It's just a conduit for the tax-exempt structure.
It doesn't flow through the IDB?
The payments, no, they do not.
Well, the legal paperwork does, the money doesn't, is what she's saying. They assign it over. I mean, they have to use the IDB and us to get the preferential rates, and Pinnacle may get some credit. Y'all get any credits, credits on
We
the?
get a tax-exempt interest rate, correct.
Yeah, and so really they have to use us as a legal conduit to do so. So technically it'll flow through the IDB, but they won't actually send any money to the IDB, but the legal process, the IDB assigns that over to Goodwill. Similar to how some of our pilots or our health and education facilities boards have done in the past. This one, I think, is the first one you've seen where we have direct with a private lender and we haven't went to the market. I think that's what's making this one a little different than what you're used to seeing. Usually we go to the market with some of the Health and Education Facilities Board's payments, but in this case,
We're the sole bondholder versus it being sold to the public.
That's, okay. And so do you have a funds flow statement, basically with all the fees and everything else attached to it?
There are no fees other than legal fees to document this transaction.
Legal fees or fees?
I have a budget for the project, for the construction of the building. I'm not exactly sure what funds flow you are referring to. We're loaning the money to build the building.
It's direct.
Yes.
Okay. So who pays the legal fees?
I'm sorry?
Who pays the legal fees?
Goodwill.
Okay. Independent.
And what?
Independently, is that what it is?
Yes, they pay the legal fees. That's part, like when you enter into a loan transaction, and there's fees involved, yes.
Okay. And they pay any other fees?
They are paying the legal fees, yes. They are not paying Pinnacle Bank a fee, no.
Okay. You've waived yours. Okay, got it.
Correct. That's part of the negotiation.
Okay.
Further discussion from the committee? Not, I'll entertain a motion for this IDB Bond Resolution.
Move for approval.
I have a motion to approve the resolution. Do I hear a second? Second, Commissioner Piercy. Further discussion? Call roll, please.
Commissioner Gooch,
Yes.
Commissioner Harris. No. Commissioner Irvin,
No.
Commissioner Johnson. Yes. Commissioner Piercy,
Yes.
Commissioner Sereno,
Yes.
Chairman P.
Yes. What was the count on that?
5-2.
Motion carries. Thank you, ladies.
Thank you.
Our next item is 7, General Fund Budget Amendment for Juvenile Magistrate. Is Mr. Lampley? Oh, there he is. Welcome.
Thank you. All right, I'm Travis Lampley. I'm the juvenile court judge here in Rutherford County. And I'm here today for a budget amendment of the current budget. We've had an unexpected absence for FMLA purposes of one of my magistrates in order to keep his dockets on track, which are statutorily mandated to occur by certain time frames. We're asking to move some money in so that I can pay temporary person or persons to cover those dockets to keep them going.
Motion to approve.
I have a motion to approve. Do I hear a second? Commissioner Johnson. Discussion. Call roll, please.
Commissioner Gooch,
Yes.
Commissioner Harris,
Yes.
Commissioner Irvin,
Yes.
Commissioner Johnson. Yes. Commissioner Piercy,
Yes.
Commissioner Sereno,
Yes.
Chairman P.
Yes. Motion carries. Thank you, Judge. Next item is a recommendation to close on the BOA building. And Michael, who's going to cover this for us?
Well, I think that if it's okay with the committee, there is people here from Klein Sweeney and maybe from American Constructors to give a presentation. That's a PowerPoint in front of you. And then the county attorney is here to answer any questions about a motion that would need to be made. I will go ahead and add before they come up here and give a presentation that this would be the last vote. There's no more extensions. So the vote tonight would be to purchase the building and move forward. I believe we would close within 45 days. I'm looking at 45-ish days after the commission meeting, if it were to pass here tonight and the commission next week. But I do believe, if the committee wants to hear from them, that architects are here and the American Constructors for the pre-construction services are also here.
Well, let me ask the committee something, because we've seen this multiple times. We haven't seen the last one. Do you want to see this presentation, or are you ready to vote?
Is it the same one we've seen before?
I believe they have some updated numbers. I'm looking back at them. I believe they do have some updates. Some of it is some repeat, but I do believe they've had some finalized numbers tonight for the committee if the committee wants to hear from them.
So you're saying that if we vote no, how much money have we invested and we'll lose?
Let me look. I think it's 350, but I could be wrong. 450.
And so this is the last one.
Well, we wouldn't put any money up on this one. We would just purchase it at this point.
You recognize.
Thank you, Mr. Chair. I would like to hear just the updates, if we could do that.
All right, that's good enough. Whoever you've got to present, please come forward.
While they're walking up here, the PowerPoint is on your iPads as well. It is on SharePoint, so if somebody at home can't see this, it is online for anybody to follow along, but it's also on your iPads in front of you.
If there's anything that's different from the last, if you would point that out first, and we'll let you present as you wish from there.
How do I,
You just speak toward that green ring in front of you there.
how do I progress this
I think it's the red
Oh.
a little quicker.
This thing?
Yeah, it
I
should be.
appreciate it.
I don't know which button it is.
There we go. I appreciate it. Thanks for letting us be here today. I'm Jacob Davis with Klein Sweeney Associates, joined by Ron Cosentino, also with Klein Sweeney, and Elin Mengelberg with American Constructors. They're on the pre-construction team. I don't have many updates. This whole front half of the slide is going to be, presentation is going to be largely similar stuff you've already seen. Typically Bart Klein would be up here giving this, but he's out on vacation. A couple updates to the schedule. The main thing that we're looking to do is have a demolition phase end of August. We're looking to have an early demo package to give that to American Constructors. They can get out there, get out onto the building and start the demo progress. That will basically, if they find any hiccups, find anything that we weren't aware of course behind walls, can't see them currently. While they're doing that, we're working on the construction documents. We can go ahead and adjust, revise our plans and catch any mistakes, any big uh-ohs before they actually come across during the actual construction. As far as the floor plans, there has not been many updates from when you last saw them. I'll briefly touch on the site plan. The last I heard from Nick Christensen, the Spence Estate litigation has been resolved, or we haven't had any further updates on that. And the First Baptist Church parking agreement with the county, I believe, is underway. I provided them a couple exhibits, and we haven't heard many pushback on that part. I will skip through the floor plans. It's going to be the same as what you'd seen beforehand. As previously discussed, this third floor is proposed to be an alternate. So when we look at the cost, look at the price differences, that's going to be the main driver of that. Exterior design, very similar to what you've seen beforehand. The main thing is Klein Sweeney and our engineers, we've just been progressing along with design development, working through on engineering the building. As we've gone through, and as we get to the next few slides, looking at the cost, in partnering with American Constructors, they've advised us on a few things as far as materials, detailing, and that's helped drive some of the costs down, make it more constructible, and make it more make sense. As far as this cost comparison, for new construction, I'm sure y'all have seen this plenty of times. So the main slide is here with the renovation. And I will note one big thing on this. We just talked with a lady from Ernie Morris, a furniture company, about 2 hours ago prior to this meeting. If some of y'all are familiar with the forensic building, Adam Dodd worked with her on bringing the furniture quote. The total FF&E down is around $200,000. They about half that down below $100,000. So same thing with this. Previously, we were showing $900,000 for FF&E. I dropped it down to $600 because we were feeling a bit safe with it. When I just met with them, it's down about another $100,000 to $200,000. So when you look at that total estimated cost for renovation, it's right around what we were telling you previously. And as we progress forward, and Elin can speak a little bit further on this, as we progress forward with design, American's going to continue to price it. I think the big thing on this is having the subcontractor input. Elin, do you have any other comments for the cost comparison?
happy to answer any questions. Elon Mingelberg with American Constructors. Some of the initial pricing was based on current historical data, if that makes sense, but similar projects. But the most recent pricing is actually feedback from multiple subs, from multiple trades. And what we've priced, as Jacob's alluded to, that price range you see up there represents the difference between fully building out the third floor or not, should more departments wish to inhabit the space. But in addition to that primary difference in cost, there are other avenues for savings should that be necessary. But what's been priced is the best version of what this building could be for the county. There's been multiple schemes for different levels of budgeting. Do you do a complete, do you do bare minimum on the facade, or do you do a more elaborate one and kind of showcase the county, administrative offices? What we've priced here, that represents the highest end range of that. So should it be needed that the budget needs to decrease, there's some easy ways that can be pulled from. And again, I think Klein Swinney is working towards simplifying the facades or using different construction methods, let's say wood framing versus metal stud framing on the interiors, finishes. A lot of this can go back with feedback from our HVAC, plumbing consultants. Currently, it looks like we've heard from electricians that we can reuse some of the existing gear in the building. That could represent a savings. So when we're in this level of design where the design team's designing it, every step along the way, they're asking us questions that we're getting real feedback from the market. They're not just speculating that one might be cheaper or the other, and it's not always just cost-based. What's efficient? What's better for long-term operations? So that's a snapshot of where we are in time. The cost up here, again, if you look at the construction cost, those numbers have not changed, but again, because of Jacob's update on FF&E cost, I think the bottom line you see there at the bottom has come down some. And I'm happy to answer any questions.
Appreciate it, Elon.
Let me just add.
Hi, I'm Ron Cosentino, Senior Architect over at Klein Swinney. One of my project input is to review the project as it's going along, looking for any possibility for savings. So I can tell you we have a good team here with American Constructors and Jacob putting together the project. My emphasis is to find exactly any savings that could be found after everyone has done their work, and that includes MEP and everybody else. So that's my position on it.
Appreciate it, Ron. Appreciate it, Elon.
Question.
You recognize. Go ahead.
In the bottom black corner with 4 numbers, what does the $20 million represent?
So the bottom rightmost number there, that $20 million one, that is the highest range, as Elon mentioned, with subcontractor feedback. That is fully fleshed out, building out the third floor, including everything full shebang. And now, like I said earlier, based on that FF&E quote, that's a drop down a little bit closer to what we said previously. You could figure 19.8 instead of the 20.3.
Does the cost of the building reflect in any of those 4 numbers?
Say that again.
Does the cost of the building reflect in any of those 4 numbers in that bottom black corner?
Absolutely. So the total cost down there at the bottom includes everything, including the $8 million building purchase.
Okay. Thank you.
Of course.
I have a question for our chairman.
You're recognized.
If we vote to approve this tonight, will it go on to full commission for final approval, or will what we vote through stand and final commission will have no say?
Nick, you want to answer this, or Michael?
So it will go for sure under the Budget Committee's report next Thursday. If it were to pass tonight, it goes under the Budget Committee report for a standalone vote at the commission level. So it would need at least a vote tonight and a vote at commission for us to purchase.
Could the vote at the full commission reverse our decision?
Yes.
Thank you.
Any further questions right now? If not, please continue.
I don't have much left in this presentation as far as This slide here just showing the comparison between the two, of new construction versus the renovating the BOA building, including the purchase.
So at least 5 million difference.
Right around a little bit lower, and again, that's just based on the FF&E cost, and as Ron and Elon was saying, as we continue along, we're going to keep finding things that will help drive the cost down.
Okay. Questions from the committee? If not, I'll entertain a motion for up or down approval.
Mr. Chairman,
You recognize?
I'll go ahead, before there's a motion or any action taken, I'll go ahead and remind the committee, we do have $9.5 million that we've already set aside for this. We set that aside back when we originally entered into the intent to purchase this building. There's also an additional approximately 3.3 million left over from other projects that would be set aside for this. So, not saying just to keep there's almost $13 million set aside for this right now that would go towards, if approved, that would go towards that $20 million number. So then we would, in the future, we'd put an additional about $7.5 million towards this. There's no intention to borrow for this moving forward as we move forward with this. The intention was just to kind of pay as we go and pay cash for it, I guess you could say. But I'd just let the committee know, and that way, if that helps or hurts the decision, but that's where we are financially with it.
Could you clarify pay as you go?
Well, since we're not borrowing, we wouldn't take any draws. We would just set the money aside. So if they came in under, which it's highly likely they will unless we encounter something unforeseen, there's no borrowing cost. So it'd be very, very similar to how we've done the forensic center, where we didn't have to worry about any arbitrage issues. We didn't have to worry about any interest or anything like that. We just set the money aside internally, and then as we get bills, we pay them, but there's no drawdown on a bond or anything like that, no interest cost for us.
Vice Chairman Johnson, you're recognized.
Need a motion to proceed?
I do.
You've got it.
I have a motion to purchase the BOA building. Is that correct? All right. Do I hear a second?
Second.
I have a motion and a second. Further discussion.
Could I ask one question?
You're recognized.
What's the land value that's assumed in the $20 million in terms of, or the $25 million comparison?
I'm sorry, could you clarify the land value?
In other words, it talks about new construction. The comparison is to $25 million. And in a document that was distributed late today, to be fair, there was an appraisal, basically, a so-called appraisal, not really an appraisal, but in my view. But it has the land value of being like $2.5 million. What's the assumed land value in the new construction number and the estimated total cost?
If you go to the slide, they're assuming 2.7 million.
Okay,
If you go back to the, I think it's to the, right there. Looks like it's 2.7 million.
And that's the assumed land cost in the $25 million on this slide.
Mm-hmm. That's the way I'm reading the slide. Jacob, is that how y'all have it?
Is that how y'all read it
That's correct.
as well? Okay. Thank you, Mr. Chairman. I appreciate it.
Further discussion. I do have a motion and a second. Call roll, please.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin?
No.
Commissioner Johnson?
Yes.
Commissioner Piercy?
No.
Commissioner Sereno?
Yes.
Chairman P?
Yes. And what's the vote on that one again?
5-2.
5-2. Motion carries. That'll move us up to item 9. Gentlemen, thank you.
Thank you, everyone.
Item 9, CCRC lease agreement. Nick, you want to come up for this one, please?
Good evening, committee members. You have on your SharePoint a draft lease with CCRC. This was discussed in Property Management Committee meeting last week and was approved and sent on here. There are a couple substantive changes that were discussed in Property Management Committee, one of which being the term of the lease. It currently is a 5-year lease. It is being changed to a 10-year lease. And then the termination provision originally had, I believe, a 60 or a 90-day out clause. That has been extended to 180 days. In other words, a 6-month termination. Since Property Management Committee meeting, there's been back and forth with myself and Community Cares Council on some legal provisions in there. The most recent draft I sent to them with the county's proposal was a couple days ago. CCRC met this morning and approved the lease as presented by my office. And so everything, I believe that's correct. And so I think everything's ready to go before you. And I think the request tonight is to a motion to approve this to send it on to the full commission.
Questions from
Mr. Irvin, I did check on some of the issues with the insurance. And the risk management department is good with it. I actually also got their current certificate of insurance. I got CCRC's, and they have got industry standard. It's generally between a $1 million and a $3 million aggregate for commercial general liability. They do not have excess coverage. That's not something that's typical in this scenario. If it's something the commission wants, the risk management would entertain it, but they didn't have a position on it either way.
Thank you. One other question, just to clarify, just to be sure. So we have a 180-day, which is new, 180-day out.
Without cause.
Without cause.
Both sides do.
Okay, thank you much.
Yes, sir.
Further discussion or questions? Hearing none, I'll entertain a motion for the Community Care Rutherford County lease agreement. Have a motion.
Second.
And a second, Commissioner Sereno. Further questions? Call roll.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin?
Yes.
Commissioner Johnson?
Yes.
Commissioner Piercy?
Yes.
Commissioner Sereno?
Yes.
Chairman P.
Yes, motion carries. Thank you.
Committee members.
Okay, the next three items, Matt Davis, Matt's. First is the transfer station tipping rates.
Good evening. Per the county's contract with WM, loading, hauling, and disposal prices are increasing for what we pay to dispose of what people bring in the transfer station starting July 1st. We're recommending the outlined updates that should be in your SharePoint. I would just point out that WM follows a formula that tracks the CPI for waste and sewage water services across the country as a 12-month average, and then based on that is where they get their rate increase from. This also includes a little bit above that to cover our employee pay and benefits cost.
Questions for Mr. Davis? You recognize.
Waste management is going up in their fees,
Yes.
and this is you countering that, right?
Yes.
Okay, who came up with these numbers?
I worked with the mayor and Michael Smith based on the information we had for WM raising their price.
Okay, my question is, Michael. So, did the finance department and the mayor and Mike, Matt, and everybody, did they ever look into the possibility that for us to break even on the 1.5 million debt service, that we should be at 87 a ton? Was that ever brought up, or?
I can't. Sorry, Matt, I can't. Are you asking me?
Yeah, because I'm obviously you and the mayor and Matt worked on these numbers. So I'm saying that for us to break even on 1.5 million debt service payment, we need to be at 87.
On which rate?
8,000 and up. So I'm just saying, did this conversation come at all, or just, I'm trying to figure out how you get to 82.
I think they recommended some rates when we met. I did meet with Matt and the mayor, and I'm okay with them. They would need to be higher if you were going to include the the debt piece. We did not specifically talk about that, since that's budgeted a different fund, but they would need to be higher if you wanted to do that. But the revenue for this goes into the solid waste fund. There's no property tax in there, so we'd have to find a way to shift that out to the debt service fund. But I do not believe that was taken into account on the 82.
Yeah, and what I'm trying to get at is, obviously, they're going up in their contract. We got that, I understand that. So you're countering that by going up also. So technically, Waste Management dictated what this price is. Would that be fair to say?
I mean, per the county's agreement with them, they do have the right to adjust their prices.
Absolutely, but we also have that right, do we not?
That's what we're asking for tonight.
Yes, but I'm saying they requested this amount. So you're going by what they requested.
I mean, it's not a direct correlation that we're going up exactly the same as they did, but we're covering their increase plus a little bit for our employee, pay and benefits.
Okay.
Basically, it's across the board, 10% or very close.
Yes.
I make the motion to approve.
I have a motion to approve the transfer station tipping fee rates. Do I hear a second?
Second.
Mr. Sereno seconds. And this is the rate that we'll actually be charging, Matt, is that correct?
Yes, sir.
The proposed, after we vote on this, if it passes, it would be.
It would start July 1st.
In case y'all didn't hear that, it would start July 1st if this passes and passes the full commission. Further discussion? Call roll.
Commissioner Gooch?
Yes.
Commissioner Harris?
No.
Commissioner Irvin?
Yes.
Commissioner Johnson? Yes. Commissioner Piercy?
Yes.
Commissioner Sereno?
Yes.
Chairman P.
Yes. Motion carries. Matt, please continue. Item 11, mattress recycling plan.
Thank you. I presented this to Public Works at their May meeting. Basically, mattresses and box springs are difficult and costly to manage. They're bulky, they damage equipment, they consume landfill space, and require excessive handling and hauling steps. We're proposing to partner with Springback Mattress Recycling to establish recycling at 3 convenience centers and the county landfill. Springback currently operates successful programs in Davidson and Wilson County. Residents would pay a flat $25 fee per mattress or box spring. Our attendants would oversee collection and trailer loading, while Springback would handle transportation and recycling. More than 95% of the mattress materials are diverted from the landfill. The program, we think, will divert 21,600 mattresses a year, reduce our hauling by 720 loads per year, making our department more efficient, and reducing equipment wear, conserving landfill space, and lowering our disposal costs in the county. Additionally, Springback expects to add 4 or 5 full-time positions to support this mattress recycling for Rutherford County. Springback will install collection trailers and loading ramps, and our staff will get training. We will do a public information campaign that would be launched before this program actually starts. I have a little bit further information from the county attorney. Basically just want the budget committee to know that our department made inquiries and has not identified another provider offering comparable mattress recycling services. We confirmed that Williamson County did not bid its agreement after determining that Springback was the only available provider of this type of service. My understanding is we want the budget committee to be informed of this, but the next step is that it would be presented to the purchasing committee. I don't think we need a motion on this.
We do.
We do? Okay.
I do have a question for you, Matt.
Yes, sir.
Even if we don't get to vote on this at this committee level, but how do you propose collecting the fees from the residents who bring in a mattress?
So Springback would provide the payment system where it would be the card type system where residents come and swipe it to pay for those.
So you're only going to accept them at locations where they're located, so you will not be accepting mattresses at all the convenience centers in the future?
We will accept them, actually. It'll be in Smyrna, Rockville, and the Leanna centers. We'll also accept them at the Old County landfill.
You need to.
Sorry.
I'm sorry. And I appreciate you turning around, but I want everybody to be able to hear.
Sure.
Please repeat that.
So in this program, of course, if it's approved, we propose to accept the mattresses at the Smyrna, Rockville, and Leanna centers, also the Old County landfill. That would be the option for residents to dispose of mattresses in the county. Did that answer your question?
It did. And I don't see Nick here, but I was going to ask about us voting on this tonight.
Well, that's what we're.
That's your, okay. Give us just a moment.
Can I ask a quick question? Is there a cost to the county for this?
Not directly. I mean, our attendance would be the person actually accepting the payment and directing the resident to load the mattress where it'll go in the trailer. But we don't have any setup cost. There's no ongoing cost.
Who does the 25 get paid to? What am I missing?
The $25 gets paid to Springback Mattress Recycling for their services of hauling it and separating the materials for recycling and sending them on.
You're recognized, Commissioner Pierce.
The mattresses that we see collected at the convenience centers now that are in the open top boxes, where do they wind up?
At this time, they're going to Middle Point landfill. It's roughly 720 loads a year, is almost 2 drivers that could, if you looked at it that way, would be totally dedicated to these. Before diesel prices started going up, this was costing our department about $384,000 a year.
So that's a cost we're going to avoid, correct?
Correct.
Thank you.
And what was that figure again?
$384,000.
Okay, thank you. Any further questions from the committee? Michael, have you got an answer for us?
Kind of. I don't know that it requires one, but we're in discussions. The reason this is different is because it doesn't cost the county any money. So technically, we're not purchasing any service. And so me and Eric were just talking about what Eric and Nick have talked about, and we all know it needs to be approved by the county, but we're kind of at, I don't want to say disagreement, but differing opinions of should it get voted on here or should it go to purchasing, and in all honesty, I don't know that there's a right or wrong. I would love, if the committee wants to move forward, if we could just take a vote, that would cover the basis here, but I don't know that it's required.
Well, what we've done, for instance, on the insurance, we actually voted for it at the purchasing and then sent it back to.
In that case, though, we had money, that was
Right,
involved. In this case, there's no money to the county here. So I think in this case, I don't know that it's required. It would make me feel better if we had a positive recommendation from this committee, maybe sending it to purchasing, but I don't necessarily think it's required.
Mr. Chairman, I'm going to move that we send this to purchasing with a positive recommendation.
I have a motion, and a second. Further discussion. Call roll, please.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin?
Yes.
Commissioner Johnson?
Yes.
Commissioner Piercy?
Yes.
Commissioner Sereno?
Yes.
Chairman P?
Yes, motion carries. This will be sent to purchasing. Item 12, TDEC Convenience Center Grant Application.
Yes, sir. The Solid Waste Department is requesting permission to apply for a grant. The grant award amount would be up to $100,000. The county would match that dollar for dollar. And we intend to use these to buy 2 compactors and 4 receiver boxes for the Laverne site.
Questions from the committee? Chairman Harris.
How much is the 2 compactors and the 4 receiver boxes, how much would that cost us?
It's about $85,000 plus or minus for each compactor and 2 receiver boxes. And then this would be basically the county would buy one and the state would pay the other one.
I have a motion to approve. Second. The grant and a second. Commissioner Irvin, you recognize.
Where would the match come from?
When the grant comes back, it would probably come out of their assigned fund balance from the solid waste fund.
Thank you.
Further discussion, any questions? Hearing none, call roll.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin? Yes. Commissioner Johnson? Commissioner Piercy?
Yes.
Commissioner Sereno?
Yes.
Chairman P?
Yes, motion carries. Thank you, Matt.
Thank you.
Item 13 is the MOU between Doors of Hope and the Correctional Work Center for the second chance. Michael, I think you're going to cover this, aren't you?
So this MOU tonight, we've been partnering, the county workhouse has been partnering with Doors of Hope for a while now. But Doors of Hope is going to apply for some funding for some grants that don't include us, but they would like to solidify what we've been doing for a while in an MOU. This is no financial obligation to the county. I spoke with Bill Cope, the superintendent of the workhouse, this morning. He couldn't be here, but we spoke, and it is something that he would wish that we approve tonight, but it really solidifies in writing what we're doing, partnering with them already. But this agreement more or less helps them apply for some grant money that solidifies what we're doing in writing. None of that money flows through the county, but that's what it's for.
You've heard the discussion. Do I hear a recommendation or further questions from the committee? Hearing none, I'll entertain a motion to allow a MOU between the Doors of Hope and the Correctional Work Center for the Second Chance Act grant, which there would be no money requirements from the county.
So moved.
I have a motion and a second. You recognize Commissioner Gooch.
Thank you. I'm just looking at the first page of the application where it says classes. Is this what the grant will be funding?
Well, so it's not, they are already providing classes there. They're seeking money to help fund these classes, and so yes, it would be, but they're going to try to continue to do this service for us as long as they can, but they're needing some financial help, and so they're reaching out to this grant. Short answer is yes, but that is not going to come, I didn't want to make any impression that's going to flow through us. That would be between them and the grant agency providing the grant for them.
So the Doors of Hope already have these classes, but this grant would help fund.
Mm-hmm. But they need an MOU between us and them to be able to help apply for that.
Thank you.
So I have a motion, I have a second, further discussion. Call roll on this one too, please.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin?
Yes.
Commissioner Johnson? Commissioner Piercy? Commissioner Sereno?
Yes.
Chairman P?
Yes. Motion carries. Next item is 14, Juvenile Detention MOU and contract with Rutherford County Board of Education for education services. Welcome.
Good evening. In front of you, you should have two MOUs that are between the Rutherford County Board of Education and Juvenile Detention Center. One of them is for basic education services, and then the second one is going to be for supplemental. These are the same MOUs that we have with the Board of Education on the regular basis, and it helps to supplement our employee salary at the Juvenile Detention Center. And if there are specific questions about that, I will try to answer them.
Mr. Chairman, so moved.
Have a motion to approve. Do I hear a second? And a second, Commissioner Johnson. Further discussion. Call roll, please.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin?
Yes.
Commissioner Johnson?
Yes.
Commissioner Piercy?
Yes.
Commissioner Sereno?
Yes.
Chairman P?
Yes, motion carries. Please continue.
Additionally, we have a budget amendment request. It is no money from fund balance. This is from within our budget, and I would like to move money from a maintenance and repair of building, as well as a maintenance and repair from equipment line item, both of those into communications, an increase of $1,400, and I can answer questions regarding that if you have them.
Have a motion and a second. Further discussion? Call roll, please.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin? Commissioner Johnson? Commissioner Piercy?
Yes.
Commissioner Sereno?
Yes.
Chairman P.
Yes, motion carries.
Thank you.
Thank you, Lynn. Item 16, General Fund Budget Amendment for Rural Fire.
Thank you, Mr. Chairman. I'm looking to move $5,000 out of data processing equipment into diesel fuel.
Motion to approve.
I have a motion and a second. Commissioner Piercy, discussion. Call roll.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin? Commissioner Johnson? Commissioner Piercy?
Yes.
Commissioner Sereno?
Yes.
Chairman P.
Yes, motion carries.
Thank you.
Thank you, Chief. I will mention, I plan under other business to allow Mr. Mark Bricker, who is the chief at Annville Fire Department, to speak. If Larry, if you'd like to stick around here, that you're welcome to. I just wanted to give you a heads up on that. Under other business, I was going to allow Chief Bricker from Annville to speak if you want to hang around. There may be questions, but anyway, you don't have to. I just want to give you a heads up on it. All right. Thank you. Item 17, Health Department Contract Amendment and Accompanying Budget Amendment for fiscal year 2026. And let's see, oh, there she is.
Good evening, everyone. I have two amendments. Which one's first?
Let's see. I'm going to have to flip pages here.
The contract one's first? Okay. So I have, the first amendment is for our local health services contract. That is a annual agreement between the county and the state, and we're just moving some of the already appropriated funds from travel to other charges to help cover our video translation service that we use in clinic. So there's no additional funds being allocated, just moving those line items.
Michael, can we take these together? We need to separate those. I didn't look left. We're going to just consider this one for right now. Questions from the committee?
Motion to approve.
I have a motion to approve and a second. Commissioner Johnson. Further discussion? Call roll, please.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin? Commissioner Johnson? Commissioner Piercy? Commissioner Sereno?
Yes.
Chairman P.
Yes, motion carries. Item 18, Health Department contract for fiscal year 2027.
The second.
Oh, I'm sorry, please.
All right, and then the other amendment that I have for you is for out of my local funds from you all, and I am requesting to move money from the other contracted service line and our in-service lines to our maintenance and repair services line to get both the staff and patient parking lots at both of the health department locations fixed up, resealed, and restriped this fiscal year.
Michael, I'm not seeing that on mine. Have you got amounts there?
Yes. I think she jumped out of order a little bit. That's
Oh, okay.
19. Sydney, on their iPads in front of you.
Okay.
If you look at the iPad in front of you, right there on your left, up, yep. So number 17, we had first. Number 17 was the contract and related budget amendment, both there for number 17. Number 18 was your contract for next year.
Okay.
And then number 19 was that budget amendment for the parking lot.
Since she's already explained that, we're going to go ahead with 19 if I don't hear objection from the committee.
Motion to approve.
Okay, I have a motion to approve 19, which is a budget amendment for additional funding, and that's to take care of your paving. Do I hear a second? And a second, Commissioner Johnson. Discussion. Call roll, please.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Urban?
Yes.
Commissioner Johnson?
Yes.
Commissioner Piercy?
Yes.
Commissioner Sereno?
Yes.
Chairman P.
Yes, motion carries. Now, item 18, Health Department contract.
I'm actually going to defer to Michael to explain it, so he can explain it how he always does, so I don't make anything confusing.
So, and did y'all vote on 17? Sorry, I had to step.
Yes.
I don't think we voted on 17.
We voted on it.
Oh, okay.
So I'm going to circle back to number 17 real quick on your iPads. So 17 includes a contract and a budget amendment. I just want to clarify that for the committee. And this is going to be for this year's budget that we're in today. The state amended the contract, but it doesn't request any more money from us. They're shifting money within the contract between line items. This also did not go to Health and Ed, and I spoke with Chairman Dodd this week about it. I'm going to send an email to the Health and Ed Committee. We needed to get this approved and in for the June 11th commission meeting to get approved. It was a timing difference, but because it didn't include any new money from the county and the state had already approved it, and it was just shifting money in the state contract, we wanted to go ahead and bring it before you tonight and then to commission next Thursday. But that is number 17, would be to amend the state contract and approve the related budget amendment that's attached there before you.
Is that also 18?
No, that is just 17. Number 18 is going to be something separate.
Yeah, we voted on the amendment on 17.
Was that?
But without, okay, you understand, well, I didn't pick up on that first time through, but this also amends the contract. So can I have a motion to accept this contract? We've already done. All right, I have a motion. And second, Commissioner Piercy. Further discussion. This already approved the amendment, but this also approves the contract. Call roll, please.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Urban?
Yes.
Commissioner Johnson?
Yes.
Commissioner Piercy?
Yes.
Commissioner Sereno?
Yes.
Chairman P.
Yes, motion carries.
All right, now number 18 is going to be the contract for the health department for next year, for budget year 26-27. Now, this is already included, the amounts are already included in your budget packets that we've been going over for next year. But we have to have a formal vote to go ahead and approve this piece so we can turn it back into the state. This funds the majority of the employees and functions over there at the health department. But again, this is already a part of the budget packet that we've been looking at over the past month. But this is a reimbursement grant. So a lot of this stuff we spend and then we turn in our expense report to them and then they reimburse us. But this will be for next budget year starting July 1.
So this is just the state and the portion accepting the grant.
Well, it's the state and federal portion both. It's on page 1 there. You'll see the state and federal piece, but it's $3,647,157. Now, that doesn't mean we will get all that up front. It's a reimbursement base, so we submit expenditure reports to the state on a routine basis, and the state reimburses us that. But this is for next fiscal year, starting July 1.
Questions from the committee? Chairman Phillips, you're recognized.
Just a quick question. How does this compare to the current budget? Is it about the same?
Well, the current contract is on your iPad under number 17. I think I know, but I don't want to just guess. The current budget is 3.692. So about 50,000 less. We knew that going into I couldn't remember the dollar amount. We knew that going into the next fiscal year. The state kind of made some cuts, and we compensated for those when we did Sydney's budget request.
And I can speak to what those cuts were, if you're interested. So one of my full-time positions was reduced to part-time. We weren't fully utilizing that anyway, and nobody was in that position actively, so I did not lose any personnel with that reduction. And then our travel and the professional services were also reduced. The professional services were primarily used for that translation service, and with the bid process for this year, that is a state contract now for the entire state, not county by county, so that funding left our contract.
Questions from the committee? Hearing no questions, I will entertain a motion.
So moved.
I have a motion to accept these. Second. And a second, Commissioner Sereno. Further questions? Call roll.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin? Yes. Commissioner Johnson? Yes. Commissioner Piercy? Yes. Commissioner Sereno?
Yes.
Chairman P?
Yes. And that passes.
Thank you.
Thank you.
Thank you. Do I hit the home button to make it go down?
You just leave it.
Okay, cool. Thank you, guys. Thank you, everyone.
All right. Item 20, General Fund Budget Amendment for Reappraisal. And Michael, I think you're going to catch this for us.
I'll take this one. So tonight you have a budget amendment from the property assessor increasing postal charges, and that's due to mailing out. We never know what the postal charges are going to be on a reappraisal year. And so we have to mail out notices every year for this. And so this increases that. On your iPads, it shows actual to date of 31,000, but this past week there was actually another 60, between 60 and 70,000 spent just this past week. So that's what this is needed for, is mailing those out. I will also go ahead and add, today we realize there may need to be one or two more amendments for the property assessor related to reappraisal. They requested those, but they came in late this afternoon. They're very small, but those will probably be brought on the 17th to Budget Committee on the 17th. But tonight, this is before you for the postage due to mailing out notices.
This is coming out of his current budget, is it?
That's
not?
correct.
Motion to approve.
I have a motion and a second. Commissioner Johnson. Discussion. Call roll, please.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin? Yes. Commissioner Johnson? Yes. Commissioner Piercy? Yes. Commissioner Sereno?
Yes.
Chairman P?
Yes, motion carries. Okay, that brings us to item 21, Ambulance Service Fund Budget Amendment. Hadn't seen this guy in a day or two.
Good evening, Chairman, Commissioners. We are requesting to move $25,000 from our vehicles line item into our health equipment line item to purchase some health equipment.
Motion to approve.
I have a motion and a second. Discussion. Hearing none, call roll.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin? Yes. Commissioner Johnson? Yes. Commissioner Piercy? Yes. Commissioner Sereno?
Yes.
Chairman P?
Yes, motion carries. Thank you, Brian.
Thank you.
Item 22, approval of advertising contracts for the Opioid Board, which these were just voted on, was that Wednesday, I guess. Michael?
So there's two contracts. There's the Lamar advertising and a Smartlite. We both currently utilize both of these for advertising, so this would be for the next year. This will be funded out of the Opioid Board money. And they're just a continuation of the contracts we've had previously.
Committee, you want to go ahead and catch the next one, the Lamar contract at the same time, or split them? Go ahead with the second one.
So that's the same explanation for both Lamar and Smartlite. They're just a continuation of what we have now. And like I said, those funds are coming out of the Rob Committee.
If you would, read off those numbers, Michael.
So for Lamar, that would be $6,400. And for Smartlite, that would be $1,917.50.
Do I hear a motion or discussion?
So moved.
I have a motion to approve.
Second.
Second, Mr. Gooch. Further discussion. Call roll.
Commissioner Gooch?
Yes.
Commissioner Harris?
Yes.
Commissioner Irvin? Yes. Commissioner Johnson? Yes.
Commissioner Piercy,
Yes.
Commissioner Sereno,
Yes.
Chairman P.
Yes, motion carries. Michael, I'll get you to continue with the MTSU contract.
So this is the contract between MTSU and the Opioid Board, or in the county, but that money is already in the budget for next year. That was $118,000 that's in the budget right now already, but that's what this agreement's for.
So we're basically approving the contract. It's already been paid.
Well, we paid over increments, but it's already in the budget for next year. But this is the contract once we've gotten it back from everybody reviewing it.
Questions from the committee? I'll entertain a motion.
So move.
Have a motion. Second, Commissioner Johnson, Commissioner Sereno on the motion. Further discussion? Call roll, please.
Commissioner Gooch,
Yes.
Commissioner Harris.
Yes.
Commissioner Irvin. Commissioner Johnson. Commissioner Piercy. Commissioner Sereno.
Yes.
Chairman P.
Yes, motion carries. We will not be looking at item 24. That was put on by mistake. Item 25, budget amendments as needed for 2025-26. Michael?
So I've got two things here. I'm going to circle back to the Opioid Board for a second. The Opioid Board met and has approved several things for next year. As I'm working through those, I will have all of those numbers prepared to give to this committee on the 17th to include in next year's budget. So I just want to make that. This coincides next with this, which would have been an amendment tonight, but I'm going to ask to defer this until the 17th. So every year on 25-26 for this year, I take a cleanup amendment, and that cleans up everything from where we have leave payouts, unforeseen unemployment expenses, people changing different health insurances, a whole number of things. I'm going to request that we move that to the 17th. Some years we take it this meeting, and some years we take it the last meeting. But in this case, we ran a payroll this week, and we had some leave payouts, and I want to make sure we encapsulate all of those into the end of the year budget amendment. So I don't have anything for you tonight. My request is that we'll take that in 2 weeks at our 17th meeting.
Okay.
So on the opioid,
Go ahead.
on the opioid, what we just did last week, are you going to do that individual line, or are you just going to do a total sum?
Well, I will put all of that as a request to add to the budget, and they either go in advertising line or they'll go into the other charges line, depending on what they're for. They'll go in the budget as a lump sum, but I will list them out for the committee as individuals if y'all want to. And that way, if this committee wishes to change anything, you can, or if you wish to leave it all together, you can. But I'll have it on a handout for you as a broken out list. But it'll be in the budget as a lump sum, and you can change that lump sum to match whatever individual you'd like to put in there.
So is the opioid abatement causes you problems because they give the money for next year in February? Is that what causes the problem on a lot of this?
Well, I wouldn't call it a problem, it just makes it different, right? And so, because it's not funded through general property tax money or anything like that, so a lot of times we're spending money from last year, spending it the next year, and so sometimes you'll see a deficit in the budget. It's really not, it's because I'm sitting, money from last year, and then, as you know, we've got a restricted pot and kind of a committed pot, and so we obviously spend the restricted pot first, but then we've got investment income that we allocate to that. So I wouldn't say it's a problem, it just makes it more complicated. But I will have that for the committee next on the 17th.
Okay. That brings us down to other business, and I'm going to ask the Ambler Fire Chief, Mark Bricker, if he'd like to speak to us. He's actually brought you a handout. I put those on your desk for you. Kind of explains their operation. But Mark, if you'd like to speak, please come forward. I will say this. Whatever request is made here, I've asked him to come back on the 17th. We've already basically got our budget in place for publication. We may not have time to get that changed. So I want to hold off on any kind of motion tonight until the 17th. Anyway, Mark, please go ahead.
Thank you guys for hearing me tonight. My name's Chief Mark Bricker with the Allenville Volunteer Fire Department. I just wanted to field any questions you guys might have, concerns, any questions you might have on the the information I brought you tonight. Maybe to give you a little more guidance on what we're facing. We can't hardly stand to go back to 150,000. Basically, it would be 100. If we got cut to $50,000, that would cut our budget to $150,000. Where our budget's already set up for $225,000, and that's keeping the doors open. That's not buying a bunch of extra frilly deals. So if we get cut, you know, like any other business, we have to look at what we have to do to keep the doors open at least a minimum standard. So I'd like for you guys to consider giving us additional funding. I've heard some news tonight that there may be some more money coming. I'm not sure, but I wanted to get up and talk to you guys and kind of, you know, field any questions y'all might have for me.
Any questions from the committee? Mark, only thing I want to say, first of all, tell about how many calls y'all had last year and how many y'all actually were able to go to.
So it's actually lined out in this. We were actually toned out for
36, I see it.
Yeah.
It's on the third page on the handout you guys got.
Yeah, so we were toned out for 836. We actually responded to 651. Now, we are volunteers, but that's basically a 77.9% making our calls. So you basically say we missed, you know, 22.1%. Is that acceptable? Probably not. You know, if it was my house, no. But I think we are a needed asset, especially in the area we serve, the Rockdale Fellowship area. If we go away, that station out there goes away. And that's a growing area out there. It would make those residents be a class 9, 10 ISO. So we just need some help in paying our bills, keeping our guys in proper PPE, keeping our trucks on the road. The county's been good to us. They've supplied us. We basically run 2 county trucks right now. The Ferrara, the newer truck, the county pays all the maintenance on it, but we still got to put fuel in it. As you guys know right now, fuel, pretty rough, $5 a gallon for diesel. So. Anything else?
Mark, what's your insurance cost per year? Just
Our
ballpark?
insurance is $40 grand. $40 grand a year for our insurance.
What's it cost to replace your PEE?
So the PPE, we try and buy 5 sets a year. It's about $5,000 a set, just for a coat and pants. So our insurance is $40 grand. Our testing that we have to do every year just to stay in compliance, that's our hose testing, pump testing, everything else is about $65,000. So there's $100,000 right there.
So 65 for testing that state and us require, also 40,000 for your insurance. And you said what, 20, 25 for a turnout?
Yes, sir.
Anyway, I just want to throw these out here. I've been a volunteer in the past myself. Give you a comparison, just to man one station, only personnel, no other cost. For the county to do that is costing us $1.1 million per station. So these guys are saving us around $980,000 per year with them operating right now. So I just want to put those numbers out in front of you, let y'all look at them. You guys know that I've been a proponent of keeping our volunteers, whether this is the level we want to fund them at. That's a discussion we'll have on the 17th. But Chairman Phillips, you're recognized, and then I want to recognize Chairman Reed also, if you'd like to speak. But go ahead.
Thank you, Mr. Chairman. Just bottom line, Michael, our budget is set at what, and this request is what?
Last year, we funded them, I believe, at $120,000. Currently in the budget is $50,000 for the three volunteer, well, 2 volunteers and 1 Eagleville is the other one. They're not a volunteer, but we have $120,000 this past year to all 3, Eagleville, Christian, and Almaville. And then this year in the budget is $50,000 for each currently.
So the budget's 50 and the request is 250? Is that right? Have I got this right?
Well, no, last year we gave 120, and I think what he's saying is their total budget is 250. Of that, we made 120 of it.
So our budget, the one that we've just advertised, is what? 120?
50. From what we just advertised, 50 is currently in the proposed budget for next year. My understanding is they're requesting to stay at the 120 they received last year. You would have to add 70,000 back to the budget for Amaville.
Any other questions for Chief Bricker? You're recognized, Chairman Groot.
Thank you, Mr. Chairman. So I'm looking at, you have 3 stations.
Yes, sir.
So one station, is it in Mount Juliet?
Yes, sir.
Okay, how much of Mount Juliet do y'all serve?
That's in Rutherford County. It's a Mount Juliet address.
It's just a Mount Juliet address?
Yes, sir.
Okay.
Yes, sir. Yeah, so we've got Mount Juliet address, we've got Smyrna address, we've got Arrington address, but they're all in Rutherford County.
Okay, that was my question, so you answered it. Thank you.
Any other questions for Chief?
I will add that I want to echo something the chairman said. Our publication, it is too late. The reason I would highly recommend not making something tonight, I do not have time to change the publication before it goes to the paper. That is why the chairman requested, if anything, to go to the 17th. We did check and see if we could, there's nothing we can change in the publication. It's just too late. So I just want to echo what the chairman said there.
Thank you. Any other questions for Chief Bricker? Not, thank you.
Thank you, gentlemen.
Chairman Reed, if you'd like to speak, please come forward.
Thank you, Mr. Chairman. You know, I've been on public safety for 12 years, and I don't think this subject has ever failed to come up like this. It happens every year. But let me tell you, not only one department was lowered to this figure of 50,000, you got 2 others too, Eagleville and Christiana. So they also was cut to 50,000 too. So I'm out in the Rockville-Eagleville area, and the Eagleville station has the same packet of materials right there too, showing what they do as well. So just to warn you, you're not only going to hear from this one, you're going to hear from 2 others as well too. I spoke yesterday with Mayor Carr. We discussed this. He has some suggestions on how to place this within the budget. I'm not going to speak for Mayor Carr tonight. I think that should be his recommendation where he comes from, because he's concerned about the budget where he's done the turns this too. I realize that any funds that are put back, it's coming from the people of Rutherford County, so we have to look at that and how we balance the budget and go from there. But I do understand there are 3 departments that are here, not just one. So I'm just telling you that, so as you're thinking about this as we go towards the 17th and where we go from there. All 3 of them are operating in a distant area of the county. They're vital to us. The one in Eagleville has a separate contract from the others due to the fact that they work out of a municipality. So we have to gauge that from where it goes from there. But like I said, I spoke with Mayor Carr yesterday. We discussed it back and forth, and he does have a suggestion. So just to tell you that he will possibly be speaking to you on this. And I guess the 17th would be the date. Is that not correct? So, yes, we have those concerns and we have those situations there. So, nothing new. It happens quite often, does it not, Mr. Piercy? We've seen this before. So, we're very fortunate in Rutherford County to have what we have as far as our first responders are concerned. I was thinking when we're talking about this cut that we've had on these, our fire and rescue department also took cuts. They had equipment they were needing to buy. They had some training that they were needing to do. They were cut as well, too. And for the benefit of the citizens of Rutherford County, to keep the tax level where it is, to keep our budget safely where it is, I think all departments across the county had to take cuts and what we've had to do. So I understand that very well. But we're very fortunate to have the fire departments that we have and the job that's being done also down in Albertville. But we'll decide that on the 17th. But thank you, sir, for the opportunity.
You're welcome.
Question, Pettis. Does the fire department at Eagleville get any funding from Eagleville City?
Yes, sir. They're also a municipality. They've just recently built a new public safety building themselves. They have just done that. They come out of what their fire department was something very small, and they just got some grants to build a public safety building. But they are funded there. What they do for us is they go outside of the city limit areas. If you'll think about Eagleville, past Eagleville there, you go towards the Arizona Highway, going back down towards College Grove, where Rutherford County still goes that direction. It puts them at a distance out that way that gives them an opportunity to maybe get to areas first before the county department gets there that's located in Rockville that goes that way. So we work in partnerships with Eagleville there. So we got the two in that area, in that direction. The one in Christiana, we have just, we're moving them to the Fosterville Midland building. That's going to be very important to us in that area too. The people in that area are served by the Barfield Department and the Rockville Department. So by putting Christiana was supposed to basically go away once we got the one at Plainview up and running, but the decision was made to move them in there to help us back that one up, and they agreed to it. So they're still there too. So just to let you know, those departments are there.
I should have asked the gentleman that was from the department, but you may know, does the Amoville department get any funding from any of the cities since they have such long range?
No, they're totally funded by
the county.
Whatever they do as far as fundraising and things of that type, and then this amount of money too.
Thank you.
Now they as all of the old departments used to request grants, so there's a possibility that they could get funding from state grants or federal sometimes.
That's
but
correct.
You may not have any in the works right now, but in the past, that's what they've done. But also it's fundraising and what the county provides. Any other questions? We'll be seeing this again, as we said, on the 17th. Kind of make a quick recap before we end here. Our next budget meeting will be the 16th, at which time we'll meet at 7 p.m., and that will be a public hearing. Then we plan to meet on the 17th, directly after that. At that night, we will consider any loose ends, kind of like what we've talked about tonight. We'll also need to vote on the tax levy, where that will be forwarded to the full commission on the 22nd. Now, I'm not forgetting we actually have a commission meeting on the 11th. Is that correct? So that's actually, the next meeting will be a full commission meeting on the 11th that I'm aware of, unless there's another committee meeting in between us. And so there's not. But anyway, the 11th, full commission meeting, 16th will be at 7 p.m., our public hearing, and then on the 17th, 5:30, we'll be considering that and our tax levy. Michael, you got anything you want to add to that?
No, I will add, well, yes, I do want to add, we have had some progress this week on getting a certified rate. I've gotten a couple questions from several people, so we're still hopeful to have that by the 17th to be able to vote on that night. And then just to reiterate what I said earlier, we will have some cleanup amendments for the 25-26 budget year on the 17th. But that night, please be prepared to vote for the, to send the appropriations resolution to the full commission for that 9 a.m. meeting on the 22nd.
Hearing no other business, we're adjourned.